Today's Thursday, February the 24th. I did a short video, probably beginning of the week. I did it off of my iPhone using Trade Chart, an iPhone app. I think that's what it's called. Let me just double check because it's a really great app if you're trading or you're just wanting to look at charts on your phone. Trading View is the name of it. It's really great. But I pointed something out about the Dow Jones. It was forming some kind of a Gartley pattern. Well, a different Gartley pattern has appeared. It showed up a couple of days ago when I used the Gartley seeking tool in MotiveWave. And look at the Dow Jones. We have this X pattern here, A, B, and then C went to 13% above A, which would predict a couple of spots for D right here, and which is 13% below X, or the Gartley number, the 61.8, below BC. Well, that's a completed Gartley pattern, pretty much perfect right there, which should indicate a bounce, but we do have some issues globally that we do have to take care of, that technical traders would have been buying today based on this low, and that's exactly what happened. Now the Nasdaq, let's take a look at the Nasdaq. Taking a second to come up here. While we're waiting for that, let's go to the SPX, and we're waiting for that too. Apple hit its 200, exceeded the 200, overshooting it in the day, and then it bounced back up and it rocketed up to this point. I just had this green line here. It would have been an indicator of where we ended on this day. Let's see, right here. This was the low of today's Thursday, Wednesday, Tuesday. So I drew this green line here, which was the low of Tuesday, which would have indicated that the Chiku span had found support on the cloud, and hence you had this bounce up in the candle, and it stopped just below the cloud. Now yesterday we had this downturn, and now we've had this pull up right back to the point where yesterday or 2 days ago the Chiku span would have hit the cloud. I don't think that that's relevant. We do see the Chiku span hitting the 50 here, getting resistance on the candles all the way down here. So all of this was predictable. The bounce off the 50, the resistance here, the support of the Chiku span on the cloud, but then we lost it. Now we had this big pullback. Why? Because we bounced off of the 200-day moving average. And if you see the stochastics show that we're due for a bounce on the short term, but the longer term shows still some possibility of downtrend for Apple. Abbott has always been very strong. Seems we're going to have a tough time getting some stocks. Let's go back to the Nasdaq. Now the Nasdaq had a tremendous rally today, despite what's happening in Ukraine. Tremendous rally, almost off of 38.2%, but stopping just below the 27.2. The Chiku span isn't telling us very much, and the cloud isn't either, except that it's getting thin here, and it may be about to turn up. Our stochastics tell us that upwards is in the future. Now the SPX, it had a pattern here which had X to A, down to B, and then if C had been completed, it would be 61.8% of A and B, of this AB, 61.8. Didn't quite make it to the 48.56, but it sure made it to the 61.8 would have been here. But it made it to this point, somewhere in this acceptable range, to have this kind of a pattern. That's called a shark pattern. And where did it come to rest? Well, right at the bottom of the shark pattern prediction, 61.8 up here, 61.8 down here, overshot it, just like it undershot up here, and now we're on the way back up, and the stochastics are all looking for a turn up as well. The volatility index, we may not see the chart, but it is still high at 30. There it is. let's look at that from a historical point of view. We certainly have seen worse, such as in the beginning of 2020, and we've seen this continuing motion of the volatility index here, getting higher highs, didn't quite meet this high, and then dropped down. So that's also a good sign. Let's look at Caterpillar. Caterpillar is a suffering stock, and there's really no financial reasons. Technically, I just think that it's an opportunity. When this stock stops falling, this doesn't tell us why it bounced back. None of these Fibonacci's correlate, so let's just keep an eye on that. But again, the stochastics are telling us that this is really, really oversold. Home Depot is also taking a kicking, but now it's come back to, let's get rid of the cloud here, because the cloud isn't telling us very much on the daily. When that isn't telling you very much, go to the weekly and look at the weekly in Home Depot. Came down to touch the bottom of the cloud and then finished the day just at the top of the cloud. And the Chiku span's low was right here. So let's draw that green line right here, which is, by the way, you can see that it's 100%. So that would correlate with this point right here. But what I'm trying to point out is that where did the Chiku span stop today? It stopped on the 200. This dashed line is the 200 simple moving average. So we had two things happening. We had the Chiku span bouncing off the 200-day simple moving average, and we had price bouncing off of the bottom of the cloud. That's enough to tell us that that's not a coincidence, that that was an important event. And if we look at the stochastics there, unfortunately, we've got the faster moving stochastic about to turn up, but the longer term stochastic shows that there's still potentially some pain in store for Home Depot. But look, the last time it came down and missed the 200, it got support on the cloud. This time it missed the 200, really took a big drop today, but got support at the bottom of the cloud. This cloud is still moving upwards, so we should be looking for Home Depot to continue to move along this cloud, get resistance at the 200, and then you've got the 50s up above for additional resistance. But you do have the cloud here, which is fairly thick for pretty good support. IBM has also taken a kicking, and I don't have any Fibonacci's here. This is the 1 day. The bottom of the day was right here. So that means that the Chiku span actually broke the bottom of the cloud. So that wasn't any particular point of support. Again, let's take a look at the weekly. And what do you see here is that on the weekly basis, the Chiku span is into the cloud. The candle is moving up towards the high of the week, not telling us much. The stochastics, unlike any of the other stocks, are telling us that this is lethargic. Going to stick to Rivian's had a good time. Now, why is Rivian moving up? Because some major hedge funds bought Rivian last week. It just took a while for it to filter down to the common folk and for people to start buying. But look at the volumes. Again, volumes nothing like back here, but this was IPO time. But the volumes here are starting to look a little bit better, a little bit more attention being paid to Rivian. Square was the big winner after the market today. It had earnings and it popped up. Last time I looked, it was up $22. That's a stock that you want to look at because when it was around 120, the ARC, Kathy Wood's ARC Innovation Fund started buying it, and they were still buying it down into 119, 118. Well, the stock dropped to 89. We're not going to see the chart, I guess. But take a look at the after hours. This is the extended chart. Let's maybe give it a break and let's see if we can't. We're frozen. Take a look at Square in the morning. Tremendous movement. Great stock. Still holding that. I have no short calls there. So the bottom line is that despite a war going on between Russia and Cold War between Russia and the rest of the world. We have a XABCD pattern, a shark pattern, been completed in the Dow. We have the Nasdaq that took a big bump up, and we have the SPX. Let's look at the weekly on the SPX, where we've got a touch of this 27.2. So this pullback, this is the COVID drop right here, and then the move up to the top of the post-COVID rally pulled back 27.2%. That's a Fibonacci number. That's a good one to expect to see a bounce on. And look at the candle movement up today down to the bottom, 27.2, and then is shooting up. So expect a little bit more positive motion tomorrow, but the market will be wary about holding on to stocks over the weekend with what's going on in the Ukraine. I think it's pretty much accepted now that there's going to be a protracted battle in the Ukraine. What does it mean for the world's economy? What does it mean for bonds? What does it mean for the ruble and the dollar? And more importantly, what does it mean for the price of oil?